Welcome to my channel. Today we will learn about debtors, creditors, and bad debts. Uh, in this video, I'm going to take you about the definition, then the example, then its posting, journal posting, and its impact in P&L balance sheet. So complete accounting we are going to take for debtors, creditors, and bad debts. Okay, so now let's start with debtors. So let's go to the definition. A person who has to pay to the business for getting the goods and services on credit. So let's split the definition. A person who has to pay to the business, okay, for getting goods and services on credit. These are very important factors that he has to pay to the business and he has taken the goods or services on credit is called as a debtor. Okay, so let's see the example. Ramesh and company purchase goods of rupees 10,000 from Sanjay Limited. Now, who is debtors and who is creditor in this? So, who is business in this and who is the purchaser? So, Ramesh and company is the purchaser in this scenario, and Sanjay Limited is basically a business. Okay. Now, Ramesh and company is a debtor for Sanjay Limited. Now, financial entry in the books of accounts of Sanjay Limited. We are going to say it in the Sanjay Limited. So, Ramesh and company account debited, okay, 10,000 rupees, and sale of good account rupees created 10,000 rupees, okay, and the narration is being goods sold on credit. Is it clear? So, Ramesh and company is a debtor for Sanjay Limited, and they have debited their account by 10,000 rupees. And what Sanjay Limited has done, they have sold the goods. So sale of goods account being credited by 10,000 rupees. Now, this is the books of Sanjay Limited, profit and loss account and balance sheet. So in profit and loss account, since sale is done, so sale of goods account, which we have said is credited. So 10,000 rupees sale we have booked, and Ramesh and company debtors account 10,000 rupees in balance sheet we booked as a debtors. So debtors we have to clearly keep in the mind that Ramesh and company, who is a purchaser from Sanjay Limited, is a debtor for Sanjay Limited. Okay, and this is an asset because money still to be received, and sale of goods, which is a sale, which is a credit in the P&L, 10,000 rupees for Sanjay Limited. Now let's see the entry for the creditor. Okay, I hope debtors are clear. If you have any doubt, please mention in the comments so that I can get back to you on that. A person whom business has to pay for getting the goods and service on credit, known as the creditor. It's very clear. In earlier case, the person has to pay to the business. In this case, the business has to pay to the person for getting the goods and services on credit. Okay, so we will use the same example of the earlier case. Ramesh and company purchased goods of rupees 10,000 from Sanjay Limited. Okay, same example of last case we have used. In this case, Sanjay Limited is a creditor for Ramesh and company. Isn't it? Last scenario, Ramesh was a debtor. In this scenario, Sanjay Limited is a creditor for Ramesh and company. Now, financial entry in the books of Ramesh. Financial entry is purchase account rupees 10,000 debit Sanjay Limited into bracket creditors account. Basically, if Sanjay Limited is a creditor account, 10,000 rupees credit. Purchase being expense in the book of Ramesh and company, which we will book in P&L debit side. So P&L debit side, all expenses, right? And in balance sheet account of Mr. Ramesh and company, where Sanjay Limited credit account 10,000 rupees. So credit is basically a liability. Hope this is clear for you. Else you can just mention into the comments. Exactly, the entries are reverse of the debtors account. Now let's go to the bad debts. What is bad debts? An irrecoverable amount from the debtor is known as bad debt. It is a revenue loss to the business. An irrecoverable amount from a debtor is known as bad debts. The amount which you cannot get it back from the debtor. There could be a reason. The debtor is unable to pay, his business is in loss, or whatever. So he is unable to pay you. In this case, basically, Ramesh and Company. Okay. So Ramesh and Company, same example we will use. Ramesh and Company purchase goods of rupees 10,000 from Sanjay Limited. Ramesh and Company is a debtor for Sanjay Limited. Now, what is the financial entry for this? Basically, it's a bad debt. So bad debt we will book as debit in the P&L. Okay. And Ramesh and Company debtors account will be credited by 10,000. There is a little catch in this now. See, let's go to the P&L now. P&L bad debt. Bad debt is being your expenses. Okay. For Sanjay Limited, 10,000 rupees is bad debts. So if you see in an earlier example, okay, I'm taking you to the first where Sanjay Limited made a sale. So they booked sale of good rupees 10,000 as a credit in P&L, and now they will book 10,000 as a bad debts in the P&L. So finally, they will have zero profit, zero loss in the P&L for sale. Okay, for a sale. And Ramesh and Company, sorry for the spelling mistake. Ramesh and Company debtor account is basically credited by 10,000. So if you see here, I never mentioned it. I didn't mention it under liability, but under basically asset. Since your debtors are under asset, you have to reduce your debtors to that extent. Okay. So in first example, you book Ramesh and Company as a 10,000 rupees debtors. Now in this entry, you will make it zero. Okay. So finally, in balance sheet, you will not have any asset against Ramesh and Company. So asset zero, sale zero. I hope this is clear. And if you have need any explanation, you can get back to me through your comments. So let's meet you in the next learning. Till then, bye bye.